Advanced Living currently operates 6 buildings which offer affordable housing. 4 are tax credit buildings, 1 is HUD subsidized, and the 6th building, the Susie Clemens House, is a layered building which includes both HUD subsidized and tax credit apartments. The following slide presentation will explain what HUD subsidized and tax credit mean and how your rent would be calculated. This slide shows a comparison of the various advanced living buildings. Schwenkfeld Manor is located at the corner of Allentown Road and Weichel Road in Lansdale, PA. The manor is actually comprised of 3 sections that were completed at different times. The West Building was completed in 1974, the East Building in 1979, and the South Building was completed in 1989. Schwenkfeld Manor is a HUD Section 8 property administered by PHFA, or Pennsylvania Housing Finance Agency. You must be 62 years of age or older to apply for the manor unless you have a mobility disability which requires architecturally altered features of an apartment. Someone who requires such features can be 18 years of age or older to apply. In the manor, your rent will be 30% of your adjusted income. Later in this presentation, we will explain how your income and the adjustment are calculated. In the manor, you have no utility bill except an $11 per month year-round air conditioning charge. If you have a car, there's a $4 per month charge. There's $31 per month charge if you choose our in-house TV package, which includes 60 channels. We are wired for Comcast, so you have 2 choices for TV in the manor: Digital Media Direct TV through us or Comcast. You cannot get Verizon in the manor. If you choose Comcast, you would have to set that up through Comcast and you would not be billed through Schwenkfeld Manor. Schwenkfeld Terrace is on the same campus as Schwenkfeld Manor at the corner of Allentown Road and Weichel Road. The terrace was built in 2008 and is a tax credit building. You must be 62 years of age or older to apply to the terrace. Durstein Run is located on Durstein Road in Hatfield, approximately 2.5 miles from the Schwenkfeld Manor Terrace campus. Durstein Run 1 was built in 2011, and Durstein Run 2 was built in 2013. They are both tax credit buildings, and like the terrace, you must be 62 years of age or older to apply to Durstein Run. North Penn Commons includes 60 affordable independent living units for seniors. North Penn Commons is also home to Manna on Main Street and Manna's Common Grounds Cafe, the Peak Center, and the North Penn YMCA. The project was completed in 2016. The affordable housing portion of the project is tax credit and is set up very similarly to Durstein Run and Schwenkfeld Terrace. You must be 62 years of age or older to apply to North Penn Commons. Schwenkfeld Terrace, Durstein Run 1 and 2, and North Penn Commons are all tax credit buildings. In these buildings, your income will determine which income bucket or range of income you fall into, and that will determine what your rent is. You will have an electric bill in these buildings. However, there is no charge for parking. All 4 of these buildings are wired for Verizon, so your 2 choices for TV in these buildings are Digital Media Direct TV or Verizon. You cannot get Comcast in any of these 4 buildings. Susie Clemens House includes 60 affordable independent living units for seniors and is located on the same campus as Durstein Run 1 and 2 in Hatfield. Susie Clemens is slightly different than our other buildings in that you can apply if you are 55 years of age or older. Also, Susie Clemens is a combination of several different programs. Advanced Living manages the waiting list for the tax credit and market rate apartments, while other programs manage the remaining waiting lists. All common areas are wheelchair accessible, and Susie Clemens House is wired for Verizon, so your 2 choices for TV are Digital Media Direct TV or Verizon. You cannot get Comcast in Susie Clemens. Schwenkfeld Terrace, Durstein Run 1 and 2, and North Penn Commons are tax credit buildings, and a portion of the Susie Clemens House is tax credit. Low-income housing tax credit is a newer form of providing affordable housing and is overseen by the IRS. The federal government issues tax credits to state governments. When Advanced Living is preparing to start a new project, Advanced Living applies for these tax credits. These tax credits are then purchased by private investors. This is how the development of the housing project is funded. Once the housing project is complete and made available to residents, the tax credit project must be self-sufficient and able to run on the rent the project takes in. The IRS determines how many apartments are available in each income bucket or range of income. Schwenkfeld Manor is HUD subsidized. Residents pay 30% of their monthly adjusted income as rent, while HUD pays the difference between what the resident pays and what the apartment would rent for on the open market. The HUD subsidized program and the tax credit program have the same goal: to create and to preserve affordable housing for eligible Americans. North Penn Commons has all one-bedroom apartments. Full annual recertifications are required in North Penn Commons only every 6th year. For the in-between years, residents are only required to do a very easy self-certification. Rents and income limits are subject to change and usually do change annually. The resident pays their own electric bill. Electric is supplied through Lansdale Borough for North Penn Commons. The current utility allowance for North Penn Commons is $90 per month. You may personally spend more or less than that amount depending on your actual usage. The total rent amount shown has already been reduced by $90. Parking is included in North Penn Commons. There is no additional parking fee. Unfortunately, the waiting list for the 20% category is currently closed. The waiting list was originally established using the results of the lottery drawing. When Advanced Living completes a project, they establish the waiting list by randomly drawing the names of all current applicants at the time the building is ready for occupancy. Any applications received following the lottery drawing are placed on the waiting list in the order that they are received. Because North Penn Commons is a fairly new building, there has been very little turnover in the 50% category. The length of wait time is 7 years. The waiting list for the 60% category is approximately 1 to 1.5 years. Durstein Run 1 has all one-bedroom apartments. Because Durstein 1 has no 80% or market rate category, full annual recertifications are required in Durstein Run 1 only every 6th year. For the in-between years, residents are only required to do a very easy self-certification. Rents and income limits are subject to change and usually do change annually. The resident pays their own electric bill. The utility allowance for Durstein Run 1 is $105 per month. Parking is included at Durstein Run 1. There is no additional parking fee. Unfortunately, the waiting list for the 20% category is currently closed. The wait time on the waiting list varies depending on which category you fall into. The 50% waiting list is approximately 8 years, and the waiting list for the 60% category is currently about 6 months. While the rents are slightly different, North Penn Commons and Durstein Run 1 have the same income categories. The IRS determines how many residents in each income category we must accept in order for the building to be successful and able to maintain itself. Currently, for these two buildings, we are accepting applications in the 50% and 60% income categories only. As a single person, if your income falls in the range $15,641 to $39,100, you fall into the 50% level. As a couple, if your income falls in the range $17,861 to $44,650, you fall into the 50% level. As a single person, if your income falls in the range $39,101 to $46,920, you fall into the 60% level. and as a couple, if your income falls in the range $44,651 to $53,580, you fall into the 60% level. As a single person, if your income is $46,921 or above, or as a couple, if your income is $53,581 or above, you do not qualify for this program. Durstein Run 2 has all one-bedroom apartments. Because the 80% market rate category is included in this building, full annual recertifications are required in Durstein Run 2. Rents and income limits are subject to change and usually do change annually. The resident pays their own electric bill. PPL, Pennsylvania Power and Light, is the electric company for Durstein Run 2. The current utility allowance for Durstein Run 2 is $105 per month. You may personally spend more or less than that amount depending on your actual usage. The total rent amount shown has already been reduced by $105. Parking is included at Durstein Run 2. There is no additional parking fee. Unfortunately, the waiting list for the 20% category is currently closed. The wait time on the waiting list varies depending on which category you fall into. The 50% waiting list is approximately 6 years for this building. The waiting list for the 60% category is approximately 1 year, and the waiting list for the 80% category is approximately 6 months to 1 year. The Susie Clemens house has all one-bedroom apartments. Full annual recertifications will be required in Susie Clemens. Rents and income limits are subject to change. Residents pay their own electric bill. PPL, Pennsylvania Power and Light, is the electric company for Susie Clemens. The current utility allowance is $77 per month. You may personally spend more or less than that amount depending on your actual usage. The total rent amount shown has already been reduced by $77. Parking is included at Susie Clemens. There is no additional parking fee. Currently, we are accepting applications for the 50%, 60%, and 80% income categories at Susie Clemens. We are not accepting applications for the 20% income category. The waiting list was originally established using the results of the lottery drawing. When Advanced Living completes a project, they establish the waiting list by randomly drawing the names of all current applicants at the time the building is ready for occupancy. Any applications received following the lottery drawing are placed on the waiting list in the order that they are received. The wait time on the waiting list varies depending on which category you fall into. The 50% waiting list is approximately 7 to 8 years. The waiting list for the 60% and 80% categories is approximately 1 year. The IRS determines how many residents in each income category we must accept in order for the building to be successful and be able to maintain itself. The income limits for Durstein Run 2 are the same as Durstein Run 1 for the 20, 50, and 60% income categories. Currently, we are accepting applications in the 50%, 60%, and 80% income categories only for both Durstein Run 2 and Susie Clemens house. While the rents and income limits are slightly different for Durstein Run 2 and Susie Clemens house, they have the same income categories, including the 80% level. Schwenkfeld Terrace has all one-bedroom apartments. Like Durstein Run 1 and North Penn Commons, the terrace has no 80% or market rate category, so full annual recertifications are required in the terrace only every 6th year. For the in-between years, residents are only required to do a very easy self-certification. Rents and income limits are subject to change and usually do change annually. The resident pays their own electric bill. PECO is the electric company for Schwenkfeld Terrace. The current utility allowance for Schwenkfeld Terrace is $86 per month. You may personally spend more or less than that amount depending on your actual usage. The total rent amount shown has already been reduced by $86. Parking is included at the terrace. There is no additional parking fee. The terrace income categories are slightly different than our other buildings because it has a 40% income category that the other buildings don't have. Unfortunately, the waiting list for the 20% and 40% categories are currently closed. The wait time on the 50% waiting list is approximately 3 years, and the 60% waiting list is approximately 1 to 1.5 years. The IRS determines how many residents in each income category we must accept in order for the building to be successful and able to maintain itself. As a single person, if your income falls in the range $31,281 to $39,100, you fall into the 50% level. As a couple, if your income falls in the range $35,721 to $44,650, you fall into the 50% level. As a single person, if your income falls in the range $39,101 to $46,920, you fall into the 60% level, and as a couple, if your income falls in the range $44,651 to $53,580, you fall into the 60% level. As a single person, if your income is $46,921 or above, or as a couple, if your income is $53,581 or above, you do not qualify for this program. As mentioned earlier, Schwenkfeld Manor is a Section 8 HUD subsidized housing program. The rent is based on income, and the remaining portion is paid by HUD, or the Department of Housing and Urban Development. Residents pay only 30% of their monthly adjusted income for rent. Each resident in a subsidized unit must be recertified annually to determine continued eligibility for the program. If a resident's income changes, especially if income increases by $200 per month or more, residents are required to let us know so that we can adjust the rent amount. In the manor, you have no utility bill. You do have a monthly $11 charge for air conditioning. We charge this year-round so that residents do not have to budget for a larger amount just in the summer. There is also a $4 per month parking fee if you have a car. If you do not have a car, you are not charged for parking. If you are a couple and each person has a car, you are charged $8 per month for the 2 cars. Currently in the manor, the wait list is approximately 2.5 years for an efficiency or studio apartment and 4.5 years for a 1-bedroom apartment. If you take an efficiency, you must remain in an efficiency apartment. You cannot move from an efficiency to a 1-bedroom apartment. You cannot move from apartment to apartment within any building. You can, however, move from building to building. For instance, if you have applied to all of these buildings and you take an efficiency in the manor, and if, for example, a couple of years later you come to the top of the waiting list at the Terrace or Durstein Run, you can then move to the Terrace or Durstein Run from the manor. To be eligible for the manor, as a single person, your income must be $62,500 or less. As a couple, your income must be $71,400 or less. Some people with incomes in the higher end of that range may not qualify for the west or south buildings, but will still be eligible for the east building. You do not need to worry about which of the manor buildings you are eligible for. That will be determined more accurately when you reach the top of the waiting list and are preparing to move in. Now we will get into the details of how to calculate your income. This slide applies to all 6 buildings, whether they are tax credit or HUD subsidized. Your income is calculated the same way for all buildings. After going through this example, hopefully you will be able to plug in your own numbers so that you can fairly accurately calculate your income in order to determine your rent. Before you move in, all of these dollar amounts will be verified through a third party. We will have you sign verification forms. We send these verifications out to the appropriate third party, your bank, your insurance company, etc. We'll start with calculating your income from assets. The top portion of the slide pertains to assets. Some of these categories will not apply to you. Everyone's situation is different. If you don't have a certain item, you will just skip that item and not include it in your own income. You may have some items that are not included in our example, such as CDs, stocks, or bonds. If you have any such items, simply add them to your list when you calculate your income and include cash value and earnings for each. First, we enter a 6-month average for your checking account. Most people's checking accounts fluctuate quite a lot during a month, so for this reason we use a 6-month average rather than the current balance. Your bank will determine what this average is, and they also will give us your annual earnings or interest percentage if applicable. In our example, this person has a 6-month average of $600 in their checking and makes 0.5% interest annually, or $3. Also verify through your bank your current savings account and any earnings or interest. In our example, this person has a current balance in their savings of $3,000 and makes 0.5% interest annually, or $15. If you own a home, you can still apply to any of the advanced living properties. Once it is time for you to move in, you must actively be trying to sell your house. If you have not sold your house by the time you move in, that is okay, but you must be actively trying to sell your house. To determine the cash value of your home, we most often will have the value verified through your realtor. We subtract any monies owed on the property, realtor fees, closing costs, and the remaining is what we consider as the cash value of your home. The person in our example might have a house valued at $200,000, but after we subtract what is owed on a mortgage, realtor fees, and closing costs, the cash value of their home is $100,000. Their home has no actual earnings, so we enter $0 for the earnings. If you have an annuity or an IRA or other similar type of retirement account, you would enter the cash value or the actual amount that you would receive if you converted the account to a lump sum of cash. An annuity is a contract sold by an insurance company designed to provide payments, usually to a retired person at specified intervals. Generally, when the holder has begun receiving annuity payments, the holder can no longer convert it to a lump sum of cash. In this situation, the holder will receive regular payments from the annuity that will be treated as regular periodic income, and the annuity will no longer be counted as an asset. Similarly, the cash value of an IRA is counted as an asset unless benefits are being received through periodic payments. Typically, the value of an IRA is counted as an asset until you take your first required minimum distribution for the year in which you turn age 72, or 70 and a half if you reach 70 and a half before January 1st, 2020. Once you take the required minimum distribution, that amount is considered periodic income, and the IRA is no longer included in the asset category. The person in our example has a cash value of $50,000 and earnings in interest or dividends of $1,500. If you have life insurance, we count it as an asset only if it has cash value. If it is whole life, it has cash value. If it is term life or is irrevocable, it does not have cash value to you, and we will not count it as your asset. If you don't know, we can verify whether it is whole or term life through the verification process before you move in. In our example, this person has a whole life insurance policy with a cash value of $1,000, and there are no earnings on this policy. We also have to include any cash you have on hand as an asset. For this category, we are not talking about the money you have in the bank. This is cash in your purse or pocket, cash in the cookie jar, cash under the mattress. You only need to declare the amount of cash. You don't need to prove how much cash you have on hand, but we must ask. The reason for this question is to be fair. If we count one person's money in the bank, it would not be fair if we did not count another person's money under their mattress. In our example, this person has $50 cash on hand. In our example, this person has a total of $154,650 in assets, with an actual earnings total of $1,518. If the total of assets is more than $5,000, we next calculate the imputed income. This is an amount of income we assign to the total of assets solely for the sake of the annual income calculation. The imputed income is not real income. For example, money under a mattress is not earning income. If the money were put in a savings account, it would earn interest. Imputed income from such an asset is the interest the money should earn if it were put in a savings account. Currently, HUD thinks that assets should be earning at least 0.06% in interest, so we multiply the total assets by 0.0006, and in the case of our example, we get an imputed amount of $93. Later, we will add the greater of the imputed earnings or the actual earnings, which in our example is the actual earnings of $1,518, to the periodic income. Next, we'll calculate the periodic income for our example. In our example, this person receives $1,200 monthly in Social Security, or $14,400 per year. We do use the gross amount of Social Security before Medicare or other insurance premiums are taken out. This person receives $50 per month or $600 per year from an annuity, so this is also considered periodic income. You would also include any wages if you are still working, periodic income from pensions, or required minimum distributions from IRAs in this category. The total periodic income for the person in our example is $15,000. Next, we add the greater of the imputed earnings or the actual earnings to the total periodic earnings, which in our example is the actual earnings of $1,518. The total gross income for the person in our example is $16,518. Let's look back at the various buildings. The individual in our example with a gross income of $16,518 is eligible for the Susie Clemens House. Their income is greater than $14,760, but less than $36,900. So this person falls into the 50% income category. This person's rent would be $819 in Susie Clemens. The individual in our example with a gross income of $16,518 is also eligible for North Penn Commons. Their income is greater than $15,640, but less than $39,100. So again, this person falls into the 50% income category. This person's rent would be $815 in North Penn Commons. The individual in our example also falls into the 50% income category in Gerstein Run 1. This person's rent would be $855 in Gerstein Run 1. The individual in our example also falls into the 50% income category in Gerstein Run 2. This person's rent would be $836 in Gerstein Run 2. This individual is also eligible for Schwenkfeld Terrace. Their income is greater than $15,640, but less than $31,280, so this person falls into the 40% income category, and they would pay $632 for rent at Schwenkfeld Terrace. We know that the person in our example is eligible for Schwenkfeld Manor, but we don't yet know what their rent will be. First, we need to calculate eligible medical expenses, subtract that from the income, and calculate the rent from the adjusted income. The medical expense deduction is that portion of total medical expenses that exceeds 3% of annual income. The person in our example has $170 for Medicare taken out of their Social Security check each month, or $2,040 per year. They pay $90 per month for a supplemental insurance, or $1,080 per year. This person has paid $300 in copays in the past 12 months to their pharmacy. They have paid $150 in copays in the past 12 months to the physicians they see on a regular basis. This person has a total medical expense of $3,570. The medical expense deduction is that portion of total medical expenses that exceeds 3% of annual income. So now we need to calculate 3% of the gross income. In this example, 3% of this person's gross income of $16,518 is $496. We subtract the $496 from this person's total medical expenses, and we get $3,074 for eligible medical expenses. Each elderly or disabled household at the manor receives a $400 family deduction. Because this is a family deduction, each family receives only one deduction, even if there are two household members who are both elderly or disabled. Now we subtract the eligible medical expenses and the $400 elderly or disabled family deduction. In our example, this comes to a net income of $13,044. Now it's a simple matter to divide the net income by 12 months in the year, which in this example equals $1,087. And multiply that amount by 30% to determine the rent, which in this case is $326. Let's compare what the person in our example would pay for rent in each building. Because of the slight differences in the programs of each building, the person would pay $819 in the Susie Clemens house, $815 per month in North Penn Commons, $855 in Durstein Run 1, $836 in Durstein Run 2, and $632 per month in Schwenkfeld Terrace, because it has a 40% income level that the other tax credit buildings do not have. This person would also pay an electric bill in any of the tax credit buildings. In Schwenkfeld Manor, because it is HUD subsidized and a resident pays 30% of their income adjusted with medical expenses, the person in our example would pay $326 per month and $11 per month year-round for air conditioning. The rent will often be lower in Schwenkfeld Manor, but this is not always the case. You will need to figure out what your rent would be and where you fall within the income ranges for the tax credit buildings to determine what your rent would be in each building. You might find that you would prefer to live in a particular building and that there is very little difference in the rent for you. Everyone's situation is different. We always encourage you to apply to all the buildings. When you come to the top of the list of any building, you can then decide what is best for your particular situation. We hope that this slideshow has been helpful for you. Once a month, we offer question and answer sessions and apartment tours in person so that we can give you all the information you need to make an informed decision. Please call our office to reserve a spot on one of our monthly tours. We look forward to meeting you.